Well, when you're getting ready to secure that new home, one of the key pieces of that process is the appraisal. But what if your lender says, hey, you can waive the appraisal? Is that a good thing? We're going to ask Bill that next. Welcome into the Smart Mortgage Show. Glad to have you here. If you haven't subscribed to the channel, please do that. We talk all kinds of mortgage lending, home buying topics, and it's all educational. And again, free of charge. All we ask is that you subscribe to the channel along the way. We got a good topic today, talking about appraisals, Bill. Does this happen all the time where a lender will waive an appraisal before we jump into this?
No, it does not happen all the time. And it seems random. It's not random, but it seems random because of the homes that they agree to waive the appraisal on. But I would say it happens, about 20% of the time.
So explain this to us in this process for someone that maybe had this happen and is looking for a little information on that, or is maybe going into the home buying process and maybe come across a lender down the road that gives them this option. What are we talking about here, and why does this happen?
So an appraisal waiver, it's not like the lender is skipping the appraisal or the valuation process. There's still an evaluation or a valuation taking place. The difference, though, is we don't need the old school appraiser to go into the property and put together an appraisal manually. What's happening is, and everybody's probably familiar with the Zillow Zestimate, where you can see how much your house is worth, or if you're looking at houses, see how much they're worth. This is like a Zestimate with a much larger data bank and much higher degree of accuracy. And one of the things that the appraisal waiver, or they want us to really call it what it is. It's a value acceptance. So if you're buying a house for $500,000, Fannie Mae is just accepting that value based on the, valuation tools that it's using in the background. One of the really big things that it's using is there an appraisal on file in the last 5 or 10 years? Because that appraisal is going to, they're going to apply some appreciation metrics to it to see if we're in line with what that house should be worth. So we see a lot where maybe somebody's buying a house for $500,000. They're putting down $400,000. You'd think they're only borrowing $100,000. The loan to value's very low. It's at 20%. It's not risky. And we don't get an appraisal waiver. Well, maybe that house hasn't been appraised in 20 years. So we've got no data for that house. But the reason for it is a high degree of certainty with Fannie Mae and Freddie Mac that the value that they're using is substantiated and they feel really comfortable with it.
Okay, so let's get into some benefits and some risks here. Obviously, we want to talk about that when you're trying to decide whether or not this is a good thing. So let's start with the benefits first. What do the borrowers like about this?
Well, the borrower likes the fact that they save $500 to $800 on the cost of an appraisal. So no appraisal is required. So that's, money that they don't have to put out when buying a house. Also, it provides a level of certainty. They don't have to worry about what's the appraised value going to come in at, and is that going to cause any issues with the financing or cause me to need to bring more money, or is it going to change the interest rate or add PMI? Also, it gets them to the point where the loan can get cleared to close more quickly. So the process is simpler, and the loans close or get cleared to close, and they can close more quickly. So it's a lot of benefit there. And also from a competitive standpoint, if we can get an appraisal waiver up front, then we can feel confident to, as part of our offer, waive the appraisal contingency and just tell the seller we don't care what it appraises for because we already have a level of certainty about the appraisal.
So there's some benefits. Then what is the risk, though? What should we be a little bit hesitant about this? What are some things to keep in mind?
So the risks are, and I want to preface this by saying we don't feel like these risks are very dangerous or very common risks. They are risks and they need to be thought about and discussed. But one of them is that you're overpaying for the house. So, the algorithm says the house is worth $500,000. but there's a cracked foundation and no appraiser caught it. Now, let me just caution you on this because you've walked through the house, and if there's a cracked foundation, you would have seen it. Really, the cracked foundation is more often caught by a home inspector than an appraiser. Any real estate agent will tell you that the appraiser is in and out of the house in 5 minutes. Currently, now there's a new appraisal coming in November of 2026 that's going to change that. But as of right now, that appraiser is in and out of the house very quickly, and it's the home inspector that would find that kind of an issue. So, but you could overpay for the house. Also, there is a possibility you could lose the waiver, and we go in, we don't have a waiver, everything's fine, but then something changes, the credit score drops, or they decide to put less money down. That waiver can vanish. I had it happen one time. It is not pleasant. It puts everybody in a really bad spot. It is not common, but it can happen. Also, negotiation leverage. If you were not going to waive the appraisal, or you were going to not waive the appraisal contingency and you were waiting for the appraised value to come in so that, hey, if it appraised low, I'm going to renegotiate. An appraisal waiver takes that out of the picture. Now, 99 out of 100 times, if we get the waiver, people go with the waiver because that waiver is very accurate, and there's a slim chance that if we get the waiver at 500,000, that the appraiser is going to appraise it less than that. Okay. But I had a client or two say, I want to see what it appraises for because I don't think it's worth that, and I want to renegotiate. Now, in those instances, the house did appraise for the purchase price, so they still did not have an opportunity to negotiate. So, but the appraisal waiver would remove that opportunity because we got a value acceptance at the purchase price. So there's nothing to negotiate.
Okay. Well, if you are in this position, Bill, then the question is, do you waive or not waive that appraisal? So what would your general guidance be there?
My general guidance is 99 out of 100 times we are going to take the value acceptance. We are going to take the appraisal waiver. That being said, there might be a very unique scenario where we just don't think the value's there and we want the ability to negotiate, or we want an extra set of eyes on the property, in which case we're going to waive the appraisal waiver and actually have an appraiser go into the home.
All right, good deal. And then I know you kind of had a kind of a little pro tip for real estate agents. I think if someone's listening into this that you wanted to kind of finish off with, right?
Yeah, the distinction between an appraisal waiver or a value acceptance is not the same thing as somebody waiving the appraisal contingency, right? So when you get an appraisal waiver or a value acceptance, there's no requirement at all for an appraisal. If the buyer waives the appraisal contingency, we still need to get an appraisal. It's just that the buyer's saying, I don't care what it appraises for. I'm going to accept the value at whatever it comes in at, and I'll make up the difference either with my own cash or allowing the LTV to increase on the loan. But really what that means largely is an appraiser still needs to go out to the home. So on the listing agent side, if there's any defects in the home that could be problematic, they need to be aware of those. And we really need to take steps to be cognizant of those and solve those issues however we need to up front.
All right, very good. So the waiver could be a good tool, right, to get in your home faster, but it's not really a substitute for due diligence. So keep that in mind. Again, these are the kind of questions you want to ask your lender. And if you want to reach out to Bill directly, just text the word LEND to 21,000 to get in touch there. Again, LEND to 21,000. All that contact information is on the screen and also down in the show description as well. So check it out there if you have any further questions. But hopefully this video has helped you out. If it has, please hit subscribe. We'd appreciate that support. But that'll do it for us here on the Smart Mortgage Show. We'll talk to you next time. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.